Every dollar in your wallet has a secret job you never signed up for. It's not just your money, it's the world's money. For the last 80 years, the US dollar has been the reserve currency of the entire planet. Which means when Brazil wants to buy oil from Saudi Arabia, they don't use reals or reals. They use dollars. When Vietnam trades with Germany, they settle in dollars. When a bank in Tokyo needs to hold a safe asset overnight, it holds dollars. The dollar is everywhere. And for most of your life, that's been one of America's biggest advantages. But something is quietly shifting, and the people running the global financial system are starting to ask a question that would have been unthinkable 20 years ago. What happens if the dollar loses that job? To understand why this matters, you have to rewind to 1944. World War II is almost over. The world's economies are in ruins, and 44 countries send representatives to a hotel in Bretton Woods, New Hampshire to answer one question. How do we rebuild the global financial system? The answer they landed on was simple. Every country would peg their currency to the US dollar, and the US dollar would be backed by gold at a fixed rate of $35 per ounce. The logic made sense. America came out of WW2 as the world's dominant economic and military power. We had the factories, the gold, and the guns. So everyone agreed. The dollar is the anchor. And that created something called the Bretton Woods system, which is basically the birth certificate of dollar dominance. Now fast forward to 1971. Nixon decides the gold backing is too restrictive and drops it entirely. The dollar is no longer backed by gold. It's backed by something less tangible, but arguably more powerful. Trust. Trust in the US economy. Trust in US institutions. Trust in the US military. And for the next 50 years, that trust held. The dollar became the default currency for global trade, for oil contracts, for debt issuance, for foreign reserves. If you wanted to participate in the global economy, you needed dollars. That's the system we built. And for a long time, it worked beautifully. For us.
Here's the part nobody explains clearly. Being the world's reserve currency isn't just a title. It's a superpower with very real economic benefits. Think of it this way. Imagine you and your friends are playing a board game, and halfway through, everyone agrees that your chips are the only chips that count. So whenever anyone wants to buy anything from anyone, they first have to come to you and exchange their chips for yours. That's America's position in the global economy. Because when countries around the world need dollars to trade, they have to buy dollars. And to buy dollars, they usually buy US Treasury bonds, which means the US government can borrow money at lower interest rates than almost any other country on Earth, which means we can run bigger deficits, fund bigger programs, and maintain a bigger military than our economic size would otherwise allow. Economists have a term for this. They call it the exorbitant privilege, and it's exactly what it sounds like. But here's what they don't tell you. Exorbitant privileges have a cost, and we've been paying it for decades without realizing it. So if the dollar is so powerful, why is anyone questioning it? 3 reasons, and they're all happening at the same time. Reason 1, America started weaponizing the dollar. In 2022, after Russia invaded Ukraine, the US and its allies did something remarkable. They froze $300 billion worth of Russian central bank reserves. Assets that Russia held in dollars overseas, just gone, locked, inaccessible. Now, from America's perspective, that was a powerful foreign policy move. But from the perspective of every other country watching, China, India, Saudi Arabia, Brazil, it sent a very different message. It said, if you hold your savings in dollars, America can take them away. And that changed the calculus for a lot of countries. Because suddenly, the dollar wasn't just a neutral currency. It was a weapon. And nobody wants to store their wealth in someone else's weapon. Reason 2, America's debt is becoming impossible to ignore. The US national debt just crossed $36 trillion, and we're adding roughly $1 trillion to that number every 100 days. To service that debt, the Treasury has to issue bonds, lots of them. And for decades, foreign countries gobbled those bonds up because the dollar was safe and reliable. But when you're borrowing this much, people start asking questions. What if America can't pay this back? What if inflation erodes the value of these bonds? What if we're holding an asset that's slowly losing purchasing power? Reason 3, the alternatives are arriving. China has been quietly building an alternative payment system called CIPS, the Cross-Border Interbank Payment System. It's basically a version of the SWIFT network, which is the global messaging system that banks use to transfer dollars internationally. Meanwhile, the BRICS nations, Brazil, Russia, India, China, South Africa, and now several others, have been openly discussing a shared currency that could bypass the dollar entirely for trade between their countries. These countries now represent roughly 40% of global GDP. That's not a fringe movement anymore. Here's why this matters to you personally. If demand for dollars slowly falls, a few things happen in sequence. First, fewer countries need to hold U.S. Treasury bonds, which means the U.S. government has to offer higher interest rates to attract buyers. And when government borrowing rates go up, everything built on top of them goes up too. Mortgage rates, car loans, credit card rates, business loans. Second, the dollar weakens relative to other currencies, which sounds fine until you realize that America imports a massive amount of goods: electronics, clothing, oil, food, and a weaker dollar means all of those imports cost more, which means inflation doesn't go away, it gets structural. Third, and this one is the quiet one, America loses its ability to run large deficits cheaply. The military, Social Security, Medicare, all of it gets more expensive to fund, and the political consequences of that are hard to predict. None of this happens overnight. Reserve currency shifts take decades, but the direction of travel matters, and right now, the arrows are pointing the wrong way. Here's where it gets interesting, because there's no clean answer. Option 1, the dollar weakens.
Now, China tightly controls capital flows. Until that changes, the yuan can't fully replace the dollar. Option 3, gold makes a comeback. This one sounds old-fashioned, but central banks globally have been buying gold at the fastest pace in 50 years. China, Russia, India, Poland, Turkey, they're all stacking it. Gold doesn't have political risk. You can't freeze it, you can't sanction it, and in a world where trust in currencies is declining, the oldest store of value is looking attractive again. Option 4, something we haven't invented yet. Some economists point to digital currencies, either a new global digital reserve asset or a basket of currencies managed by an international body. It sounds abstract today, but then again, so did the idea of a paper currency backed by nothing but trust, right up until Nixon made it happen in 1971.
Here's the bottom line. The dollar isn't collapsing tomorrow, and anyone telling you to panic is selling you something. But the era of unchallenged dollar dominance, the era where America could borrow unlimited money at low rates because everyone needed our currency, that era is getting shorter. And the decisions that get made in the next decade about debt, about foreign policy, about digital currencies, about trust, those decisions will determine whether the dollar adapts and survives or slowly fades, like every reserve currency before it. Because the British pound used to be the world's reserve currency too. And if you want to understand the forces actually shaping your financial future, the ones traditional financial media is too busy chasing headlines to cover, hit subscribe, because this is exactly the kind of story they won't tell you.